Big news from Sun Life. It's CEO Dean Connor announcing his retirement and his replacement. He joins us now. Dean Connor is the CEO of Sun Life. Dean, great to have you with us. Appreciate your time today.
Hi, Amanda.
So let's just start. I mean, it's interesting. I mean, obviously, succession is something that does not happen in a matter of weeks or even months. Given that your replacement is somebody well known to you and the market and the company, I'm going to guess this is a long-term plan. But just reflect on the decision to announce it now. You're not alone. There's actually a number of high-profile CEOs who've said now, which, of course, you think in some ways you must be relieved, and in other ways it must be very difficult.
Well, Amanda, the timing, there's nothing really special about the timing, except I turn 65 next fall, a few months after I'm retiring. And so my view, and I discussed this with the board, that seemed like a reasonable date to retire at. That was a conversation we had several years ago. And it'll been just about 10 years by the time I retire. And that seemed like a reasonable time. And of course, when we agreed on all that, we didn't know about COVID, but I don't think COVID, frankly, is going to change the succession plan at all. The board, I think, has done a great job managing the process, and it's going to be a seamless transition to Kevin Strain.
Well, obviously, it's been an interesting time to be at the helm of a company like this, and I mean, since 2009, really, this long, slow decline in interest rates has created pressures that you've had to deal with. Just reflect on where you think we are in that macro trend. There's a sense that we may see a turn at some point. Do you believe in that? And will it be enough to make any difference for companies like yours?
Well, the honest answer is we don't know. And I think that's, in fact, I think it's unknowable. So, and I've said this before, Amanda, I think when we've spoken before, our approach is to plan for war and pray for peace. And so when it comes to interest rates, we assume that rates will stay low for long. And with COVID and all the debt that's been raised, lower for longer. But there's also a prospect at some point rates could start moving back up in response to inflation or other factors. Inflation that could be generated by, again, this massive amount of debt that's been raised by governments around the world. So we don't know. We've arranged the affairs of Sun. We designed the business to be able to not just survive, but actually thrive in a low for long world. And that includes not just our insurance products, but all the moves we made on the asset management side. So we've been building up SLC, our alternatives asset manager. It's now $145 billion of AUM after the close of the most recent acquisition. And those alternative assets, we think, are just what our clients need in a low for long world. So, you know, we have to make our own fun, I'll put it that way.
It's interesting that definitely the move on the wealth side across the whole industry globally has been into alternatives. It makes you wonder how long we can call them alternatives when everybody's in them. But you definitely have seen an appetite for acquisitions despite everything that's going on. Do you have more appetite? Are you open now to looking around at deals that you could be doing?
Well, Amanda, you're right. We've been busy. We started this year with, it wasn't an acquisition, but a major bancassurance distribution arrangement in Vietnam with TP Bank, very successful bank in Vietnam. We acquired Infrared, a majority ownership of Infrared, an infrastructure investment manager based in London. That closed July the 1st. We announced the acquisition of Crescent, which is an alternative credit manager that should close around the end of the year. And then we announced another large bancassurance transaction in Vietnam with ACB Bank. So we've been very busy. Looking ahead, we still have lots of balance sheet strength and financial flexibility. Our leverage ratio is very high. We've got excess capital. We'll continue to be disciplined, but continue to look for opportunities across all of our pillars.
Obviously, you, like any other big company, had to adjust to the pandemic. You showed in your quarter that the move to digital can actually drive profit. How much of that was already happening? How much of that will continue to happen? And how will it shape your business? What will permanently change for you?
Yeah, Amanda, you're absolutely right. This shift of our business model to digital, everything digital, is here to stay. And it doesn't mean that, advisor to client interactions will be completely non-face-to-face. I think post-COVID, you'll see some return to face-to-face, but a lot of the stuff has been done in the past face-to-face can be done virtually. So we had rolled out Zoom to our advisors in Canada a few years ago. And a minority of them were using it. And now with COVID, adoption's gone way up. And I think they've realized that it's not only great for clients, but it's great for productivity. So if you don't have to drive an hour to visit a client, to update their, the KYC information, know your client information, that is a productivity boon. And if you're a Sun Life advisor in Jakarta or Manila or, Mumbai, any of those cities in Asia where the traffic is absolutely awful, the ability to conduct some of your business virtually is just a huge productivity lift. So our view is that, and that's just one example of how digital has helped our business. There's lots of others. So our view is that it's here to stay, digital everything, and this COVID crisis has actually been an opportunity to accelerate, to really pull forward a lot of things that we've been planning for the next few years, pull them forward and do them faster.
There's a deal you did that you just announced that feels like it could be important. It feels like something people could be doing. And this is this big annuity buy-in transaction for Corby and Hiram Walker. Just give me a sense of whether you think this is important. It's $176 million, so it's a kind of a meaningful transaction. What does it represent? Is this the beginning of a trend, do you think?
I'd say it's chapter 2 or chapter 3 of a fascinating 12-chapter book. And the book is all about companies kind of realizing that defined benefit pension obligations and managing those is for them kind of a sideline. It's like they're trying to manage a little insurance company inside their business enterprise. And so what's happening in the direction of travel is more and more of our clients are saying, you know what, I'd rather run my business. You take over this pension obligation. We're going to insure it. We're going to buy annuities. We're going to get it off of our balance sheet once and for all. We don't have to worry about it. We can focus on running our business. And what's fascinating is this has been the direction of travel for a number of years. And even as interest rates have fallen, we continue to see large transactions. We did earlier this year the largest single-day transaction ever in the history of this in Canada, I think $800+ million. So I think you're going to see more of this going forward. And what's interesting is it has less to do with the level of interest rates and more to do with how well-funded defined benefit pensions are.